Live from the offices of Great River Investments in the beautiful city of Burlington, Iowa, this is the Marvin Knows Finances Show. I am your host, Marvin Thompson, your certified financial planner, and joining me today is special guest Shane Hunold, owner and CEO of Hunold Insurance, and Joe Jolan of Jolan Media in West Burlington, Iowa, also owner and CEO.
Yeah, hey, thank you.
I hang out with some very impressive people here.
Yeah.
Thank you for taking a few minutes out of your day to listen in, and for all you listeners on Google Podcasts and Spotify, don't forget to click the subscribe button. If you prefer to see how we make this show come together, please check out our YouTube channel, Marvin Knows Finances, and click subscribe there as well. Just like the last and every time, I have to take care of a little business before we get moving too far forward to please my compliance department. And due to our topic today, we have some extra disclosures to provide. Marvin Thompson is an investment advisor representative and a registered representative with Brokers Financial member SIPC. Opinions expressed in this program do not necessarily reflect those of Brokers Financial. The topics discussed and opinions given are not intended to address the specific needs of any listener. Great River Investments, LLC does not offer legal or tax advice. Listeners are encouraged to discuss their financial needs with the appropriate professional regarding your individual circumstances. Investments in commodities may have greater volatility than investments in traditional securities, particularly if the instruments involve leverage. The value of commodity-linked derivative instruments may be affected by changes in overall market movements, commodity index volatility. Changes in interest rates are factors affecting a particular industry or commodity, such as drought, floods, weather, livestock disease, embargoes, tariffs, and international economic, political, and regulatory developments. Use of leveraged commodity-linked derivatives creates an opportunity for increased return, but at the same time creates the possibility for greater loss.
There you go. That's a lot of reading.
That disclosure is a mouthful, let me tell you. So, guys, welcome. Thank you for joining me today.
Morning.
How you doing today, Shane?
I'm here.
Yeah,
no, it's great.
As we were talking, this is your busy time of the year. One of your busy times of the year.
This is one of them, yes.
Yes. So thank you for joining us and taking some time out of your day to be part of this. So, for those of you listening, if you don't know, we live in a part of the world where agriculture production is a prevalent industry. It's probably the top one, I would imagine. So Shane has joined us today to discuss his business. Shane specializes in crop insurance.
True.
And we're going to ask him some questions about how he utilizes crop insurance to protect his clientele, and maybe even help them take some of the extremes in farming out so they can focus on growing their farming business. Because farming business is like every other business.
Still just a business.
Still just a business. Exactly. So Shane, tell us a little bit about your background. Tell us how to contact you. What's your past work history? What are your degrees in? I've known you for a long time, so...
I mean, you can just keep talking. You're doing a great job.
No, it's your turn now.
All right, that's reasonable. Background, grew up farming. Still farm with my father occasionally when he allows me on the farm. Sorry.
No, you're right.
Went to Iowa State University. Should have been an agronomist. Didn't quite make it to the agronomy side, but ended up getting a secondary, or I should say a professional certification later, a certified crop advisor.
Okay.
Still hold those credentials. I worked as an agronomist in the co-op system and then in the private sector for, 8-9 years before moving into insurance.
Okay.
And we did property and casualty for a little bit, and then for the last 13, 14 years, been crop insurance has been my game, if you will.
Yep. And when did you start your own place?
A decade ago now.
It's been 10 years already?
It's been 10 years this year.
Because you and I met when you were working at your previous employer.
It's true. It's
Okay.
true. And so it's been a decade now. I currently work in Iowa, Illinois, Missouri, Arkansas, and I'm thinking about Kansas next year.
No kidding.
Yeah.
So the idea of slowing down, it's not even in your
No, that went out the windshield. It's gone.
it's not on your radar screen.
No, it's nowhere near it.
Yeah. So in fairness to full disclosure, my brother and I, our farming operation, we work with Shane. We worked with Shane for a number of years. We heavily rely on his advice for what type of protection we should have. He's very good about sitting down with us one-on-one a couple times a year to discuss, what did we just go through? What was last year like? What's the plans for this year? And he makes appropriate recommendations based on that. So he has our full faith and confidence in that. There's no doubt about it. So let's talk about crop insurance because, this is my 10th or 11th year of farming now. And crop insurance is still one of those things that kind of confuses me a little bit, even with my financial background.
That's reasonable.
That's one of the reasons why we rely on you so much.
Appreciate that.
So can you talk about the basics of the federal crop insurance program and why did it even come into existence?
Sure. So the federal crop insurance program is a federally subsidized program in that the government pays quite a large portion of all premiums. And that's really quite nice in that it's in the government and the population at large's best interest to keep more farmers in business. More farmers we have, more competition there is, more grain there is to be sold. And that tends to work in everybody's best interest. So by subsidizing it, it makes it, I'd say, quite affordable. Now there are, of course, okay, fair point.
More disclosures or no?
More disclosures coming.
I'm not writing the checks, so yes, that's a very reasonable look. But
giving you a hard time.
No, you should. I deserve it. But for the amount of income that we can guarantee, or at least the amount of coverage we can guarantee, the premium offset is quite reasonable.
Okay.
As it compares to all other forms of insurance.
So I've always kind of looked at it as if, as a farmer or a farming operation, if there's some sort of natural disaster,
Correct.
Basically crop insurance doesn't make you profitable, but it gives you enough to hopefully continue to farm in the next year or two, whatever.
Yeah, that's correct. Now, there are certain years, this being one of them potentially, depending upon what the markets continue to do, where crop insurance may be able to lead to insuring for a profit. It doesn't happen very often.
Okay.
But there are, I think, in the last 10 years, 2 years that I can say where we definitively got into those ranges.
Mm-hmm.
Otherwise, it's definitely a backstop. It's definitely there to make sure that you can continue farming.
Okay.
I have a client in southern Missouri that it wasn't that he couldn't afford the major loss. It was that he didn't want to have the issue in cash.
Explain what that means.
So year to year, you have cash that you have to work with, operating cash.
Yeah.
All right. So he may have had enough cash sitting around to pay for a complete loss 1 year.
Okay.
2 years, questionable. 3 years, definitively not. But this allows you to not have to have that massive dip in equity.
Gotcha.
And it works really well. It covers everything that Mother Nature can throw at you.
Gotcha. So are there people out there who farm who do not have crop insurance?
Absolutely.
I'm telling you, that's not even a thought on the radar screen.
I know. But every year I pick up at least 5 or 6 clients that don't.
Really?
Never have, just
never have had it, just
No.
got lucky, or then they experienced a loss and suddenly here we go.
2012 was a big one. You saw an awful lot of people pick up crop insurance that never had before
Okay.
because it just didn't rain.
Well, we had people last year who experienced a pretty significant hailstorm just south of Burlington.
We did.
Pretty much leveled their crops.
Yes.
Yes.
Yeah. It took the crops from being a very fantastic crop to maybe 10 to 20% of what they would have expected, which is far below what they needed to, I guess, get whole again.
Yeah.
So,
Yeah.
but fortunately, crop insurance is there for those purposes.
So you could have had a situation where you had somebody on one side of the road who had crop insurance, and a situation where the guy across the road didn't have crop insurance, and
It's
you got
entirely possible that's accurate.
a
Yeah.
tale of two cities right there.
Yes.
Yeah.
Yes.
Okay.
And then the person that had it, likely, as long as they set their policies up appropriately, agent-wise, was it a great year? No.
Gotcha.
Did it hurt? Sure. But are still very, very financially sound at this particular point. And the other person probably is too, as long as they had played defense for the last 10 years. Mm-hmm. But generally speaking, last year's type of a storm, you can wipe out 10 years worth of equity in 1 year.
It's crazy.
It's absolutely nuts.
Purpose of insurance, folks, is to transfer that risk
Absolutely.
to a company or a government entity in this case that is
Yes.
trying to help you.
Yes.
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 And I give Shane a hard time about my premiums being a lot, but honestly, for what they pay out and for what they cover, it's invaluable.
Yeah,
it
I
truly
mean,
is. Because
if I could-
we've had crop insurance claims.
Yes. Yes.
You know?
Yeah. We won't go too deep into detail on that one.
No,
but,
but it's just a fact. We've had crop insurance claims, and they've saved us.
Oh, yeah. If I could buy this for my business, I would.
Absolutely.
I mean, the government's going to subsidize it, and we're okay with that, then absolutely we should.
Yep.
But it's like I said, it's better for the population at large that this program exists.
Yep. Absolutely. So let's talk about the cost benefits of crop insurance.
Got
Okay.
it. So cost benefit ratio, it really, when you're looking at it, today's premiums, you're looking at somewhere around $15 to $20 an acre for corn on the top end. You can go higher than that, but most folks don't. And then soybeans wise, $10 to $15 at most. You can, this year, not unheard of to get $600 in coverage for that $10.
Really?
Especially on folks that have a higher 10-year history, and that's what we build our basis off of, is 10 years worth of history, crop history, and then the current commodity prices. And we can get $600 to $800 for $10, $15.
Yeah.
That's really pretty reasonable when we look at the input costs from everything else, especially for what we're guaranteeing.
Yep, absolutely. The commodity prices affect crop insurance.
Yes.
Okay. Can you explain how that works? Because that's still something, I know that the government comes out with their limits or whatever they say it is.
Correct.
And then it's based on payments are based on that? Claims are based on that?
Correct.
Okay.
So the crop insurance year starts March 15th. Well,
Okay.
that's actually the date at which you have to sign up and pick your coverages. The month of February, we average Chicago Board of Trade prices for the futures contracts, and that's where we come up with our starting commodity prices.
Are those fall commodity price contracts?
Fall, yes, fall, November and December,
Okay.
corn and beans respectively. What's nice about that is historically those were the highs. Well, if we look back the last 20 years, February was always the time to sell,
Okay.
because generally speaking, that's when we saw things go in the right direction. The crop was in, we knew what we had. Now we can start selling our crop and get pretty decent prices. The last 5 years or so hasn't been that way. We've been in a very volatile market in February. But this year it kind of worked out to our advantages. And then as we move through the year, if you have the revenue side of the policy, I should, I guess, back up. There are two portions of it. There's the yield and there's the revenue. The yield just works off that March 15th, price range. The revenue side, though, is which roughly 95% of everyone who carries federal crop has, works off of a fall price. And the way crop insurance works today is you get paid the higher of the two between the spring and the fall. Right now, we're looking at probably at least $1 or $2 gain between spring and fall.
Nice.
It can work in the other direction. So if prices would happen to fall, which I don't anticipate, but it's entirely possible, especially looking at commodities today, it takes an awful lot more bushels per acre at that lower price point in order to make up the same revenue per acre that the government's guaranteeing. So in effect, you're guaranteeing a revenue per acre, and that's what they're trying to do. And everything is stacked in the producer's favor. So we look at the fall price, November Dece, which is generally the low period, which is beneficial to the client. And we have this February average, which is also beneficial to the client. The government did a very good job of stacking everything in the favor of the producer. It doesn't always feel that way when you read the policy itself, but
It's assuming you read it.
that's fair. That's why you keep me around. So
Yep.
He does, yeah.
this is what I do.
This is what you do. Exactly right.
I read policy. It's fun. No, not so much. But the commodities really do work in your favor that way, so assuming that we look at historical trends and they stay that way.
It's funny you mentioned historical trends because we were literally just talking about that on the podcast we just recorded.
Oh, really?
Well, history tends to repeat itself.
Exactly.
It's not exact, but it sets up the trend
No.
for what you're looking at in the future.
Yes. Yes.
So
And in farming, I tend to think that the best indicator of what next year's going to bring is look at last year. It's not always accurate, especially in today's world, but if we look at what prices are doing, look at last year and look at the trends we've seen in the last 5 years, and you'll probably find what the trends are going to be this year. Not perfect, but within reason.
absolutely. All right. Private product advantages and disadvantages. So is this considered a private product?
No, this is
Okay.
federal.
Okay. Are there private products out there?
There are.
Interesting.
So you have the federal program, and then you have all of the individual crop insurance companies that are paid by the federal crop company, I guess, the government, to administer crop insurance. But they've also been given the ability to be real crop insurance companies.
So they can have their own product?
They have their own products, and each company kind of has little ones that they tweak. But they do have their purposes. They generally are a lot less expensive if it's a singular peril. But then if you're starting to get into things that carry more and more coverage, then of course they get expensive very quickly because there's no subsidies with it.
Okay.
More of the popular ones in this part of the world would be hail, of course. There's grain fire, wind, green snap. There's some other ones that are...
We picked up a couple of those.
You did?
Last year because our corn crop got...
Well, you
hammered.
had a loss. Well, you would have had a loss had the private product been in place.
Yeah.
Right?
Yep. But we picked up wind coverage this year, I
You
think.
did.
And we've always carried hail coverage.
Yes.
Because that's not a super common event around here, but like I said, after experiencing what some farmers did last year in this area,
Yeah, 2-inch hail will definitely get rid of your crop for you.
corn stalk can't handle that.
No, you don't need a brush hog after that. You just let Mother Nature take care of it.
Exactly.
But these individual private products do have a good purpose.
Okay.
A lot of folks in Iowa, a lot of producers have what they call an enterprise unit now, where everything is lumped together.
Okay.
All of your corn is in one basket, all your beans is one basket.
That's my next question. Yep.
Funny how that works.
Weird, isn't it?
I know, interesting. But these individual products generally work on the per acre basis. So instead of having fields that are 20, 30 miles apart, now we can cover them for individual perils in a one-off situation. And generally when we're talking about hail, when we're talking about wind, when we're talking about these individual perils, they are generally one-offs.
Okay.
They aren't area-wide.
Mm-hmm.
Now we're working our way into a drought.
Say, knock on
Probably
wood.
shouldn't have done that. Sorry about that. Yes, but that's where the multi-peril policy really picks up. It shines when we see something that's area wide. It really just takes over.
Gotcha. Now I know when we were talking about these individual perils, you were like, I'm basically recommending a solid base product here.
Correct.
Okay, and then my brother and I made the decision, of course, based on our personal experience, what we should.
You did. So I was going to leave that.
Is that
alone.
well? No, I mean, this is an open mic here. Basically, we talk about it.
Okay, that's reasonable.
So we did not carry wind coverage up until this year.
No,
this
you
will be the
didn't.
first year we have it.
So from a private product standpoint, as you say, I like to think that you should very much build in a good solid base.
Mm-hmm.
You have a federal program that's highly subsidized.
Mm-hmm.
Let's use all of that to our advantage that we possibly can. If we have extra insurance money after that we want to place in something, or we find that we have a risk that we think is unaddressed, then we can look at the other things.
Mm-hmm.
But unless we're sitting at a 80% coverage, 85 if we really feel it's necessary, I would prefer that we take our federal crop coverages up to those levels before we go off and spend money on individual basis.
Mm-hmm.
Just because the federal program covers everything Mother Nature has,
Mm-hmm.
whereas hail, wind, they cover exactly what they say.
What's green snap?
Green snap, thanks, is when you have a...
You said it.
That's fair. Yeah. Green snap is when we have generally a straight line wind, not always, but heavy wind conditions that break off a stalk, generally in the bottom 12 inches of it.
Okay.
Usually we see it at a stage in the crop's production cycle where it's trying to put on a lot of green matter very quickly. So you have your seed, your sprout, and then we're growing very rapidly to effectively make this big photosynthate factory so we can start producing grain.
Mm-hmm.
All right, so that process, stop, saw that wink, get me into my wheelhouse here.
I like it.
I sideline as an agronomist, by the way.
Yes, you do. Weird. That's the next question.
Yeah, but the long story short is, when plants grow rapidly like that, they don't put a whole lot of material or energy into making a very sturdy structure. That comes later. Mm-hmm. And therefore, when we have a very strong wind and hits it, it snaps it off in that
Down it
brittle
goes.
area. Right.
And it's done.
Right. So you generally don't see green snap later in its life cycle. You generally see it, like I said, in that first, maybe 12 to 16 inches. I've seen it as tall as 3-4 feet, but that's usually a very strong wind.
Mm-hmm.
And a lot of times we'll see lodging instead of green snap, so it won't snap off. It'll actually uproot the entire root ball.
Oh.
Because once again, it maybe not had the opportunity to grow the root ball as far as you would like it to have.
Mm-hmm.
One thing that's kind of nice this year, where we've had some drought, some dryness, we're forcing the crops to actually look for water.
Going down. Yeah.
So that wind policy that you bought, once again, I'd like to knock on wood. Hopefully it's not necessary, because you've got a lot of things going in the plant's favor right now.
I really hope it's not necessary too, because I don't want to go through a harvest like we did last year,
Right.
trying to get that corn off the ground.
Very few people buy insurance on their home to hope it burns down, right? So
Exactly right. Exactly
let's hope
right.
it doesn't work this way either.
Yep. Let's talk about your agronomy background. Tell us how it helps you in terms of making your recommendations to clients and so forth.
Sure. So as stated earlier, I've got a strong agronomy background, and what I've found that works really nice as it pairs with crop insurance is that I had a professor at one point tell me that agronomics and economics have to cross paths if we're going to stay in business. Right? So they really do. You can throw everything at the plant all day long, spend just a ton of money, and you may not get anything back out of it. So we really need to step back and kind of look at what we're putting into this and what our economic return is going to be. Crop insurance, I find, comes into that where we start to look at, all right, we have X amount of money already into the crop. Is it worth harvesting? Is it worth continuing on? Is it worth putting more money into it? Can I backstop that? And I find that my agronomic background really lends itself to that because fungicides is a good example of it. Especially as we move to the south, is it worth putting it on? Is it not? Do we really anticipate that much yield gain? Sometimes yes, sometimes no. And it really is situational dependent. And then I find that my background tends to lend itself very well to putting dollars to real life scenarios, and then how it applies to the protection that comes with it. And then we take it a step further and we look at grain markets and try to figure out, okay, if we're getting say $15 for our beans right now, or $7 or so for our corn, maybe we really do want to go after that extra bushel of grain if it's less than the cost of production.
You said fungicide. That's sometimes a bad word in our operation.
It can be. Fungicide is one of those things that you either, it's like insurance. You either consistently do it or you don't, because it's not going to consistently return you yields. It's going to say maybe 7 out of 10 or 5 out of 10. It's when Mother Nature throws you that curveball that you're not entirely ready for. But those few years that it does hit,
massive.
It shines.
Wayne, my brother calls it go-go juice.
Exactly.
It's go-go juice.
Exactly.
It just gives it's like a steroid boost to the crop.
Right. Exactly.
Pretty crazy.
And it works, right?
It has worked.
It works when the need is there. The problem is the need's not always there. And you need to apply it early enough before you know the need's already there. Because if you can see the need, it's too late.
See, that's where we rely on yet another person at a different company.
The other agronomist.
The other agronomist that, works with us. So.
Exactly.
Right.
And like I said, you believe it and you don't. And quite frankly, especially when we see commodity prices being where they are, it probably pays. I mean, don't leave it on the table.
Absolutely right. All right, so at the beginning of the show, we talked about this is one of your busy times of the year because it's acreage reporting season for you. Okay?
It is.
Explain to everybody listening what we as farmers have to do and then what we have to give to you. How does it work?
There you go. So the process is adapting or changing over time here. It used to be you would just go to the FSA office, Farm Service Agency for non-acronym farming people, and report your acres when you did it. And then that information we would take and we would effectively convert it into a crop insurance document. Now today we still use that process. It's still preferred by most agents. You can also utilize precision farming, so your GPS information, your data, you can report direct to your agent as well. Either way, effectively we need to have the planting dates because those are very important to when coverage starts to diminish. If we know that if we plant too late, actuarially, we lose coverage and we also lose production and therefore coverage goes down. So how much, where it's at, and when it was done. And those things develop your coverage. So the more acres you plant, the more coverage you end up with. And then, of course, where it is, because each individual farm carries its own database, its own history, and therefore its own coverages.
Yep.
And we have to have all that done by July 15th. So if anyone's out there listening, 7/15,
please have it done.
Please have it done.
The FSA office would like to see you.
They would very much like to see you.
So it's kind of weird that the government just doesn't take our word for it.
Isn't it?
They want these crops certified. Wow. Isn't that odd? There's no error whatsoever there.
No.
There's no room for manipulation, anything.
No, and thanks. Now we're in complete conjecture. But in a world where data has a lot of value, the information that you give to both the Farm Service Agency and to your crop insurance agent is very, very valuable. And the NAS, which is the National Ag Statistics Services, uses some of that data to put out reports.
Okay, so that's going to bring me to a question that we don't have on the list.
Thought it
so
might.
I got a phone call and said like three of my acres of a 40-acre field had been chosen to be part of a national ag survey.
Lucky you.
Well, apparently they don't come in and damage my crop or anything like that. They
No,
do
they
it from
don't.
satellite photos or whatever. What is it?
So,
I mean, actually, this happened to me 2 years ago, but the field they chose, we took prevent planting on.
that was fun.
So they didn't.
Wait, so you're the reason the crop, took a huge jump that year?
Yeah.
Good to know.
Thank you. You're welcome.
So, NAS.
All 3 acres.
Exactly. There you go. National Ag Statistics Services, also known as NAS. That's what I'll refer to it as because it's just a lot easier to say. They are responsible for releasing the reports for planting intentions, for crop quality issues. And we'll see reports be, every month, every other month kind of released. And sadly, we oftentimes see the markets take a giant jump in one direction or the other, especially if the market wasn't anticipating what NAS released.
Okay.
What NAS does is effectively what you got in the mail, what your phone call was. It goes out and randomly surveys things. And they take those 3 acres, they look at it, they count the pods, they look at stand counts, they figure out what's there, and from that they extrapolate it to the nationwide and say, okay, well, we can say roughly this many acres are planted, this is the quality of it at this time, this is what we anticipate for harvest later in the year, and then sadly the trade, I say commodity trade at this point, uses that data to develop whether or not they're buying or selling.
Gotcha.
Whether
So
they're
it
gonna
impacts
short-
prices.
Exactly.
Is this the WASDE report?
It is.
That's okay.
That's the one.
So WASDE report is released monthly.
Yes.
Monthly. And
Yes.
it gives number of acres planted,
Correct.
estimated yield off those, and
Correct.
so forth. It's a
Correct.
nationwide thing, right? It's
It
not just
is.
Midwest.
No,
It's
it is not just Midwest. Now, what's interesting is that NAS is very seldom correct. They do their best. They're a statistics service.
Sure.
But they're statistically within a margin of error. And sometimes that margin of error is bigger and sometimes it's smaller.
Good old standard deviation.
Exactly. Oh, I love stat in college.
It's the best.
Yeah, not so much. But they don't often hit it directly on the head. They do the best with what they're working with. It's still a stat. So much so that the trade, specifically some larger brokerages, have started doing their own.
Okay.
You see the Pro Ag or Pro Farmer Tour every fall now.
Yep.
That is basically to combat NAS.
Okay.
Because NAS isn't always accurate. It affects the trade, oftentimes to the negative. And so you see a lot of these other trade groups starting to do their own.
Which is good because it gives us another number to look at.
Exactly.
Yeah.
Which is absolutely great because it gives you something else. Now, the sad thing is, Chicago, I say Chicago because the Chicago Board of Trade is what pretty much our entire lives revolve around when it comes to commodity prices. But it gives us a number to look at. But generally speaking, that number doesn't carry as much weight
Gotcha.
as what the WASDE report does.
Gotcha.
Even though it's probably more accurate, at least as it pertains to the Midwest.
Gotcha. Let's look at the outlook for any recommendations you got. I mean,
I had a smart
So-
person once tell me, when you see profit, don't be scared to take it.
that's right. Never be afraid to take a profit.
Do you take your own advice there?
In a lot of cases, yes, and way too many cases, no.
Yeah, me too. But what type of outlook are you looking for here?
So when we look at, like in our local area here, you mentioned we have a drought. But when you look at the stands right now, the crops, they're looking pretty spectacular.
Oh, we have a beautiful crop brewing.
Beautiful crop going in this area of the world right now.
We do.
Even guys who somewhat got in a little bit later don't seem to be facing any experiences.
No.
We've had a good combination of some hot weather early this year, which really helped shoot up the crop a little bit.
It did.
We need some rain.
We do. We do.
So as you read your stuff, that's the kind of outlook we're looking for, And of course, any recommendations for any potential farmer who's listening to this, like what are you thinking if you don't have this crop insurance?
Right. So as we go forward, I still think that we're, I know we are in a very profitable commodity price. We have a great crop brewing, which is why if you look at the Board of Trade today and yesterday, we've been seeing some negative numbers. Chicago likes to see that. This time of year, we're in a weather market, which gives us a very sinusoidal. This thing is going to feel like it's on a roller coaster. We're going to jump up 30 cents. We're going to drop 30 cents. And anything that comes out, any little piece of information, be it Ukraine or it rained over the Corn Belt or it didn't rain over the Corn Belt, is going to move this market. And we also see a lot of speculation coming in and out as well. It's just what the nature of the beast, especially when we're looking at prices being this high. We do have a good crop growing. And what I generally like to see, and I'm not a commodity broker, full disclosure.
Neither am I.
But, yeah, exactly. I'm not sure I'd want to be in that line of work right now, but I'm glad those folks can do it. But going forward, don't be scared to take some profit. As it pertains to what I do for a living from a crop insurance standpoint, a lot of farmers, a lot of growers like to sell bushels. They say, oh, I sold 1,000 bushels. I sold 10,000 bushels. Whatever your increment is. Generally, if you want it to work in line with your crop insurance, sell dollars, don't sell bushels. So you're guaranteeing a revenue per acre. That revenue is guaranteed, provided that you sell at the same time as the markets are set for the crop insurance prices. Now, we're not, but you can average into it. But if you sell a revenue per acre, a dollar per acre, say, okay, I sold $100 per acre, or I've sold $300 per acre of my crop. Well, now we know from that standpoint, it's not bushels anymore, because bushels are not an exact number when it comes to crop insurance. We know that you are now still within what you're going to be able to be covered for. If you're covered for $1,000 an acre, sell up to $750 and still feel very confident that you're going to have some left over. When I first got into this, I was younger and arguably less intelligent. When you started working with me, questionable.
No comments.
No, just let them be. But my father said, if I take your crop insurance at the end to buy back my crop, to buy out my contracts, what do I have to eat on the rest of the year? It's a very valuable point. So you want to leave a little bit of wiggle room in there, unless you tend to be run a little harder. That's wonderful if you do, but leave a little room in there to spare, and make sure, like I said, sell dollars per acre, don't sell bushels.
Good advice. Good advice. Shane, how do people get a hold of you if they're interested in learning more about this? Phone number, website, email, throw it all out there, bud.
Well, thank you.
Yep. This is your $10 worth of marketing time.
Appreciate that. So I have a website, hunoldins.com.
How you spell Hunold?
HUNOLDIN as in Naomi S.com.
Perfect.
That gives you all the information you need. Direct line, 319-470-4441. And I'm hesitant to say this on a hot mic, but I pretty much answer that phone no matter what time of day it is. So,
Wow.
Let's call him tonight.
Yeah.
hey, you laugh, but I took a call Christmas Eve once at a family dinner.
That's not good.
It's dedication.
They needed it. So
Oh, okay.
if somebody's going to call on that day, it's a
Yeah, that's a
there's an
expensive
emergency.
thing. Yep.
So feel free to give me a jingle if you need something.
Perfect. Well, thank you for being here today. It's much appreciated.
Appreciate the invite.
So, as I'd mentioned, folks, and when you listen to Shane talk, you understand the extensive background that he brings to all of his customers. And one of the things that we like is that he farms. Him and his father farm. And a lot of our conversations over our lunch or just in general over the phone, whatever. Well, maybe we shouldn't talk about all of our conversations, but
Some of those can be left untouched.
it's easy to relate back to us because he's got that. So, as a personal friend, Shane has earned my family's trust when it comes to our crop insurance needs, as well as the guidance he provides us. So it's pretty much invaluable. So, today, my heartfelt thanks goes out to all of you for listening. A special thanks to Shane and Joe for joining me today and providing their feedback and information. Joe, it was nice to hear from you today.
Thank you. Thank you.
I love it. We want to hear from you folks, so please reach out to me by either giving me a call at 319-576-2264 or visiting my website at www.greatriverinvestments.com. Go to the Contact Us section of the site, and I or a member of my team may be in touch with you shortly to discuss our next steps together. Thank you very much, and have a good day.